Hello and welcome to the post-December USDA Report webinar from Progressive Ag. My name is Lynn Baldus, an attorney with Progressive Ag Law. Joining me are Randy Martinson, market analyst for Progressive Ag Marketing, and Peter Kemp, an attorney at Progressive Ag Law. Let's get right into it, Randy. What did you see in the December USDA report, and what should farmers do with that information?
Well, thanks, Lynn. Well, as we expected, as we said in the webinar on Monday, this report really was a non-event as far as the market was concerned. Really, the only change that came in the corn sector. And what happened is USDA came in and they lowered exports for corn by 50 million bushels. That puts it at about 1.75 billion bushels. And they increased ethanol demand by 25 million bushels. That puts ethanol at about 5.2 billion, which is now one of the largest demand sources as far as corn is concerned. What's interesting about this is the reason why we saw the ethanol increase is because of the recent renewable fuel standard change that was made. Now, we're not back up to what we initially put in for the rule or for the law a few years back, but we're increasing the corn-based ethanol. And this has happened in this report where we actually saw that come through after EPA made their change. In all, stocks were increased a little bit as far as corn is concerned by that 25 million bushels, putting stocks at 1.78 billion. So when you look at it compared to what the trade was anticipating, this was compared to 1.73 for last year, so just slightly above last year's numbers and slightly above what the average trade guess was, coming in at 1.76. So in all, it was kind of a non-event as far as corn is concerned. Looking at the other numbers, as far as soybeans, there was no change made in those numbers. Looking at the stocks that came in at 465 million bushels, slightly above the expectation. Trade had expected it to drop down to 462. That didn't happen. Everybody was expecting to see USDA to increase exports as far as soybeans were concerned. That didn't happen. They left them unchanged. We still have the second largest export pace on record for soybeans at that 1.7 billion and the largest crush estimate on record at 1.89. So we still have some pretty strong demand as far as soybeans are concerned. Wheat numbers were also left unchanged. The important factor with wheat, of course, is it's a competing product with the corn, and with a lot of feed wheat, especially in the soft red region, that's something to pay attention to. But in all, USDA left the wheat numbers unchanged at 911 million bushels. That compares to expectations of about 918, so a little bit less than what was anticipated. Now, everybody's talked about the world numbers. World numbers were also pretty much just minor tweakings with what happened in those. Argentina and Brazil production for soybeans were left unchanged. So that pretty much just put our ending stocks estimate just up slightly as far as soybeans are concerned on the world, up to 82.58 million metric ton. Corn stocks were decreased just ever so slightly to 211.85 million metric ton. And again, wheat stocks were increased a little bit more, and that's because of an increase in production in Canada. A little bit bearish with the world numbers as far as wheat is concerned, those coming in at 229.86. So in the big picture, non-event as far as the market's concerned, as far as traders are concerned, or as far as producers are concerned, this isn't going to give us much of an incentive to do anything up until probably until the Christmas season or the holiday season, where we would expect some fireworks to happen because of thin trading. But right now, this leads us up to that January report where we look for a little more fireworks.
All right. Thank you very much, Randy. We now turn to another issue facing American farmers, the Syngenta corn lawsuit. We will now hear from Ray Grabansky, president of Progressive Ag Law, and Will and Tom from Kading and Wiebolt.
Please watch a short video from our national litigation team, Phipps, Anderson, and Deacon, who are very experienced in GMO litigation.
My name is Martin Phipps, and I am from the great big town of Breckenridge, Texas. I grew up in a town I like to tell people had 3 stoplights. Those values you bring from a small town, being honest, telling the truth, and standing up and believing in something, is something that we do here at our firm.
I'm Barry Deacon. I'm originally from Arkansas, grew up in a family law firm. Farming's been a big part of my professional life in representing farmers and agricultural related entities my entire practice.
You may ask, why hire Phipps, Anderson, and Deacon? The best answer I give you is because we are so proud to represent farmers that it's the most important thing when you walk into our building and see what we do.
Part of my background was being involved in representing a co-op of rice farmers against bare crop science in the rice litigation that began in 2006. With my background in the rice litigation, that's important because that was genetically modified rice that was being experimentally tested that contaminated the U.S. rice crops. That litigation is very, very similar to the Syngenta corn litigation where an unapproved trait was marketed to China.
What you're going to find out in this case is when Syngenta released Viptera to sell to you, they hadn't even applied to China for approval. Because of that, they took a risk, and that risk ended with you losing the China market. When you're choosing a lawyer to represent you in the Syngenta litigation, every lawyer is going to tell you that they're the best. We don't have to say anything to you. We just want you to look at our record. We are the lawyers who tried and won the rice case. We're the lawyers that developed the damage models. We're the lawyers that got the punitive damage verdicts. The rice case settled for $750 million. I'm very proud to tell you that my farmers, the people that I represented, got $50 million more than everybody else. We get asked every day, is this going to be a class action? And I want to make the answer real clear. We're not class action lawyers. We represent individual farmers against Syngenta and other big companies. And why do we do that? Because class actions don't help the clients. They only help the lawyers. Each one of you farm differently. Each one of your damages are different. So what we believe is we're going to represent you individually and not like some class action lawyer.
We are certainly not against the technology that Syngenta has come up with in producing their seed. We're actually for that technology because it's good for the American farmer. What we have a fault with is what Syngenta has done in marketing its corn. It's done it in an irresponsible way, and that has affected all of us.
I don't know about you, but we need more places to sell our corn, not less. And so all we're asking Syngenta to do is to stand up and do the right thing. The same thing you do every day when anybody comes to you with an issue. You may ask what makes us different at Phipps Anderson Deacon. The answer is simple, is we care. I've been on a combine and I know how hard it is to farm. And because I'm gonna make sure when I get done with this case and I come and sit in your living room, that you're proud that I'm your lawyer.
Thousands of these cases have been filed by farmers against Syngenta.
As the video explains, Martin Phipps and Barry Deacon's in-depth knowledge and experience makes them uniquely qualified to handle these complex cases.
And I'm very proud that Progressive Ag Law and Kading and Wiebolt are affiliated with these very good national lawyers.
Our team is prepared to bring your claim against Syngenta. We're handling these cases on a contingency fee basis, which means we will not be paid unless we successfully try or settle the lawsuit, and we will pay all of the costs of litigation. We believe in this case and are putting our money where our mouth is.
We will now take some questions about both the December crop report and about the Syngenta lawsuit. Peter, many farmers have heard about this lawsuit. Could you explain kind of the background, the basics of the claim?
Yeah, I'd be happy to. So the basics are that Syngenta produced the GMO Viptera corn seed, which was marketed to U.S. farmers. These farmers were supplying both domestic and international markets, including China. While Syngenta made assurances that Chinese regulators were going to approve the Viptera corn, China in fact had a no-tolerance policy and effectively closed their market to U.S. corn after discovering Viptera traits in imported corn. These actions lowered the import demand and damaged the U.S. corn market, and many farmers are now taking action to recover losses from these actions by Syngenta.
Okay. Now, a lot of farmers are asking, why should we punish Syngenta for releasing a new variety that ostensibly helps farmers?
Well, for starters, we're not seeking to punish Syngenta simply for creating a new variety of corn. We're not against GMOs. We simply want those who make GMOs to do it in a responsible manner. No matter how easy it is to grow a new GMO crop, if importing countries will not buy that GMO, the GMO is not beneficial to the American farmer because of the drop in price. We've talked to a number of farmers, and many have said that they do not want to lose a new foreign market every time a new variety of GMOs is released.
Okay. So what are the advantages of signing with Progressive Ag Law as opposed to waiting for the class action lawsuit?
All right, there are a couple advantages. First, as you saw in the commercial, Martin Phipps and Barry Deacon's experience is a big one. But I'll focus on how we intend to litigate these cases. We start with the premise that each farmer is different, and we want to take that case individually. So when we take cases before a judge and jury, we'll be representing one farmer at a time, not a group of farmers. And we believe that will be beneficial in terms of settlement and in the judgment.
Okay, now we're going to turn to some marketing questions. Randy, you said that this report was basically as expected, but looking forward, you mentioned some fireworks around the holiday season and that January quarterly stock report. What do you see on the horizon?
Well, right now, what we would expect to see happen, up until the holiday season starts, we always get a bit of thin trading. I would expect the market to come under a little bit of pressure, but I think that's also going to build up before this January 12th report. On January 12th, USDA is going to be releasing their final production estimates, which will have a little bit better look as far as production and demand is concerned. At that report is when we expect USDA to come in and make some adjustments to production. It's primarily yield. We look for them to increase yield for both corn and soybeans. We're also going to be looking at a quarterly grain stocks report at that time frame, which means that USDA is going to come in and kind of true up their numbers. They're going to actually see where the demand is, see where the supplies have been going and what category gets them. So we'll see some adjustments as far as the demand side in that report. And last, we'll see basically where winter wheat acres come into play as well, because that report will come out. So there's a lot of numbers that are going to be coming out on that January 12th for this market to digest, and we think that could bring some fireworks to the market. We also expect the lows to be hit soon after that report comes out.
Okay. So that January report will be one to watch. We also, looking at this report, we saw a lot of movement in some of the more specialty crops, especially specialty beans. Did you want to mention that at all?
Well, that really was probably the biggest surprise in the report, is when you look at the edible bean side of things. Pinto bean production down pretty good as far as North Dakota was concerned, also pretty big as far as the U.S. was concerned. That might be a little bit supportive as far as pinto bean prices are concerned going forward. Some of the other specialty crops, especially navy beans, saw a little bit of a bigger production, and blacks. Probably not so much of a movement in those, but it's a little bit friendly, I think, towards pinto beans.
Okay, good to know, to keep our eyes on that. And thank you guys for that information. We'll be back with another webinar on January 9th, previewing that January 12th USDA report. If you have any questions or would like more information, please call the number on your screen or visit progressiveaglaw.com. Thanks for watching.